Howdy, everybody. Welcome to Liberty Call. Today is Monday. What day is this? November 4th, 2024. Hope you're having a fantastical day out there in the interwebs. It's finally starting to get some clear skies. It's been snowing since last night. So, I mean, not that hard, but I've got a date with a snowblower as soon as I finish this video. So let's get to it. So before we jump into the markets for today and the weekly update, if you could do me a favor. See my boy back here, Jake? He's just super excited for the week. So if you could do me one favor, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All righty. Well, let's hop into today's markets. Dow Jones was down 0.61%, 257 points, closed at 41,794. S&P 500 down 0.27%, 15 points, closed at 57.13. NASDAQ down 0.31%, 56 points, closed at 18,182. The VIX was fairly flat today, only up 0.09%. It's at 2190. Canada flat at 0. Brazil up 1.76%, and Mexico up 0.53. All right, let's go to Western Europe. Germany was down 0.47%. The UK up 0.09%. France down 0.5%. The Netherlands down 0.47%. Spain was down 0.32%. Italy down 0.39%. Switzerland down 0.46%. And Portugal down 0.15%. Russian exchange is both green today, or, well, let's see. They last closed on the 2nd, which was, what, Friday? We'll skip them for now. All right, and the Asian markets, looks like the Nikkei has not been open since the 1st, so we'll skip that. Australia was up 0.56%. New Zealand up New Zealand has been open since the 3rd, so it was up 0.35 on the 3rd. In China, the Shanghai was up 1.17%. The Shenzhen component up 1.99. China A50 up 1.07. DJ Shanghai up 1.34. Hang Seng up 0.3, and the Taiwan weighted up 0.81%. Great stuff, I know. Pretty exciting. All righty. Okay, well, let's get into the weekly economic update and see what's going on there. Stock slid last week as mixed economic data and strong but not spectacular Q3 corporate reports failed to inspire investors. The S&P 500 fell 1.36%, the NASDAQ declined 1.5%, and the Dow Jones Industrial Average was down 0.15%. I think I said 0.16%. And overseas markets were down 0.96%. Excuse me. Q3 reports uninspired. Stocks rallied early Wednesday after the gross domestic product report showed a strong economy that appeared on the path to a soft landing. I've got a bridge somewhere that you can buy. However, stocks moved lower throughout the day as investors digested mixed Q3 reports from a few mega cap tech names. Stocks were under more pressure Thursday, as disappointing outlooks for some key tech companies pulled the market down. A softer than expected jobs report on Friday unsettled investors, but stocks picked up as the day progressed, and attention shifted to how the Fed may interpret the jobs data. By Friday, the NASDAQ's 8-week winning streak had ended, and the S&P fell for the second straight week. All right. Fed back in focus after the jobs report. At its most recent meetings, the Fed made it clear that it needed to balance the risks of both inflation and employment. Since Friday's jobs report showed 12,000 jobs created in October, caught some by surprise. Economists expected the Labor Department to report 100,000, down from September's 223,000 jobs. Investors parsed the data and determined that the strike at a major aircraft manufacturer and 2 hurricanes caused the jobs report to fall short of estimates. Investors also appeared to believe the jobs report would prompt the Fed to move on rates at its 2-day policy meeting, which ends on November 7th, which is Thursday. All right, key economic data this week. Monday, we have motor vehicle sales and factory orders. Tuesday's election day. Woohoo! Wednesday, the FOMC meeting day 1 and the EIA petroleum status report. Thursday, the FOMC meeting day 2 and the FOMC announcement, Fed chair press conference, and productivity and costs. Friday is consumer sentiment, and Fed official Michelle Bowman will be speaking. Companies reporting earnings this week. Today on Monday, Vertex Pharmaceuticals. Tuesday, Apollo Global Management. Wednesday, Qualcomm and Gilead Sciences. Thursday is Arista Networks, Duke Energy, and Airbnb. And that is the weekly economic update. Woo! Y'all feel smarter out there? I know I do. All right, let's hop into the market recap. U.S. stocks drift lower amid caution ahead of presidential election and the Fed meeting. There's an election tomorrow. Has anyone mentioned it? Hadn't heard. All right, U.S. stocks edged lower on Monday as investors adopted a cautious stance ahead of the presidential election and the Federal Reserve's meetings. The upcoming election between Trump and Harris is tightly contested, with polls indicating a close race. I'm not sure how, but hey, there's, stupid people vote too. Recent market moves, including increases in the dollar and treasury yields, suggest some investors are positioning for a Trump victory, which could lead to more inflationary policies. That's funny that Trump would lead to more inflationary policies than a Democrat. They both lead to inflationary policies, folks. It's not a blue or a red thing. It's a government thing. Alrighty, where was I? Recent market moves, including increasing, and I already read that part. Analysts predict a Trump win could impact global tech stocks, especially those exposed to U.S.-China tensions. According to Wedbush, a Trump administration might heighten tariffs and make a firmer stance on China, potentially disrupting the tech supply chain and impacting companies like NVIDIA, Apple, and Tesla. I doubt it. NVIDIA Corporation is also set to join the Dow Jones Industrial Average on Friday, replacing Intel as it continues to thrive despite broader market concerns. Quarterly earnings season remains in focus, with about 20% of the S&P 500 scheduled to report results this week. Berkshire Hathaway reported weaker than expected Q3 earnings, sending its shares down over 2%. Marriott International also lowered its annual profit forecast due to sluggish travel demand in the U.S. and China. Viking Therapeutics saw its stock drop 7%. Despite positive phase 1 trial results for its weight loss drug. The Federal Reserve's upcoming meeting is widely expected to result in a 25 basis point rate cut, following a previous 50 basis point reduction. Investors are closely watching the Fed Chair Jerome Powell's statements on future rate cuts, especially given recent data indicating a resilient economy and persistent inflation. Powell is expected to maintain a data-driven approach without committing to further easing, as recent jobs data shows a slowing labor market. Yeah. Again, the Fed created this problem, and now everyone's looking to the Fed going, please help us. Please give us low interest rates so we can borrow money at next to nothing and continue to keep our businesses afloat, even though that they don't really make anything. Okay. Alrighty, next up comes from our buddies over at First Trust. Finally, election eve. This was written by Mr. Brian Westbury. As the U.S. presidential election nears, investors should brace for potential delays in results and cautious market reactions. Election results from key states like Pennsylvania should give a solid indication of the winner by early Wednesday morning, although a clear result might take a few days. The control of the Senate is likely to be known sooner, but House results could take over a week due to close races and possible recounts. Regardless of the outcome, investors are advised against emotional reactions, as election results typically don't necessitate drastic moves. The U.S. political system's tendency towards checks and balances often tempers significant political shifts, even with a new president. For example, historical trends suggest that whichever party loses the presidency will likely gain ground in the House by the midterms, which could curtail the newest administration's agenda. The potential economic positions vary widely based on different scenarios. A Republican sweep likely sees tax cuts extended with potential reductions in green energy subsidies, which I would prefer because it's a gigantic boondoggle. Medicaid reform, which, again, it's not my job to pay for old people to have medicine. And stricter immigration policies. Yes, throw out all the 50 million illegal aliens. If Harris, with a GOP Senate dim House, with a GOP Senate and a dim House, temporary extension of the 27 tax cuts for most, larger deficits due to less focus on discretionary spending cuts. Trump with a GOP Senate, who's calling me? With a GOP Senate dim House, temporary tax cut extensions with concessions on top rates and increased state local tax deductions, alongside tariff hikes and reduced immigration. A Democrat sweep, higher taxes, increased corporate rates, potential corporate carbon tax, sustained immigration, and more involvement with Ukraine, and drag shows in all your elementary schools. I made that up. I'm just kidding. Overall, the focus will remain on how the federal budget is managed, with an urgent need to address deficits, especially given the record deficits amid low unemployment. This election won't be the last opportunity for changes, and policy shifts may come as the American people reassess priorities in the years ahead. Or the American people could pull their heads out of their asses and just do what they can to have the federal government dissolved, and then we don't have to deal with these problems. That's what I would do if I was in charge. All right, last up from Zero Hedge, the Biden-Harris economic time bomb, a warning to Trump and Musk. This was written by Daniel Lacal. All right, Mr. Lacal critiques the Biden-Harris administration's economic approach, labeling it an insane neo-Keynesian policies that have led to persistent inflation and unprecedented public debt. He argues that the inflation experienced in the U.S. stems from excessive government spending and currency printing rather than supply chain issues or corporate actions. I 100% agree. All of this is government and Fed related. I mean, yeah, the supply chains got a little off kilter back 4 years ago, but most of those problems were fixed fairly quick once people went back to work. Over the past 4 years, cumulative inflation has exceeded 20%, with public debt nearing $36 trillion, largely due to continued government spending and an increased number of government jobs. Yes, we call that welfare where I'm from. Lacal highlights that 25% of job growth in 2023 was attributed to government jobs rather than the private sector expansion, and foreign workers made up most of the workforce growth. October's job report revealed only 12,000 new jobs, 40,000 of which were government positions, underscoring what he says is a worrying imbalance in the labor market. He also points to the high government contribution to GDP growth, which he argues signals a distorted economy with weak private investment. According to Lacal, the administration's strategy was designed to create economic growth, relying on government spending, making it difficult for any successor to scale back without triggering a recession. He warns that cutting government spending and jobs would likely impact GDP negatively, yet would ultimately lead to a stronger economy supported by increased private sector jobs, investment, and exports. Lacal concludes that prioritizing government expansion risks the U.S. dollar stability and the republic's economic future, advocating for a reduction in government roles to stimulate sustainable growth in the private sector. Yeah, because when you just use government money, you're stealing from the private sector to then create a government job, which then makes government crap, which then goes and gets blown up over on the other side of the planet. So while the person who makes the government crap can then take that money and spend it in the economy, all they're doing, I mean, eventually you run out of the other people's money. Eventually there's not enough people to steal from, and you've got this this vicious cycle of spending payroll, and then eventually you run out of the money to pay the people with. So what's going to happen? I don't know. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be happy to help you get back on your financial track or get started on a financial track. All right. Well, like I said, that's everything I had for today. Me and the snowblower have a date in about 5 minutes once I go get my snow pants on and my boots, and I'll be outside. So hopefully I survive it. I mean, it's like this deep. It's not that bad. I just need to move it before it freezes. But anyways, hope everyone has a great night, and I'll talk to you next time. Adios.